Hey, this is Matt from InvestiQuant. Today is Monday, June 14, 2021. The markets have seen pretty quiet action so far today following Friday's 52-week high close. We've got an inside day forming here in the S&P. That's not the case for the other instruments. They've seen some different price action, but it's been fairly quiet. The ranges are pretty light, just 13.5 points of range in the S&P. As it trades lower today, 3 of the 4 instruments are trading lower below Friday's close. NASDAQ is the only one that has not seen the same weakness that the other instruments are seeing. But this afternoon, we're going to be looking at a study based upon trading lower going into the close on the heels of a 52-week high. So let me go ahead and set that up. This will be set up as a 3 p.m. long entry that exits at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, the pattern we're going to be looking at is simply trading below the prior session close at 3 p.m. Eastern Time when the prior session close was a 52-week high close. So to do that, I'm coming in here to the post-open filters. I'm going to hit the intraday close versus daily levels is less than the prior close. So I've got equals next to the less than prior close. That adds it to the test. Next, I'm going to go into the price patterns. I'm going to say that yesterday was a 52-week high close. I'm going to grab that straight over here from the active today section. I'm going to go to the new highs category, and I'm going to put day after a 52-week high close. So prior session closed at a 52-week high. I'm going to go ahead and hit view results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you are trading below the prior session close at 3 p.m., and the prior session was a 52-week high close. Normally I put a 10 and 200 day simple moving average on these, but since this is a 52-week high close, that's not necessary. It's going to be above all of those types of moving averages by definition. Historically, we've got 273 samples in the S&P dating back to 2003, so very large sample size here. NASDAQ, 238, the Dow, 225, and the Russell, 171. And the win rates on them are all skewed towards the upside. So S&P coming in at 63%, the NASDAQ, 58%, the Dow, 64%, and the Russell, 55%. So all of those 55% or better, and the average win and average loss is seeing a little bit larger average loss on the S&P. They're not outsized by any means, but it is a little bit larger on the downside there, and that is also the case in the NASDAQ. For the Dow, it's very similar in size, and for the Russell, the win's just a touch bigger than the average loss. So we're a little bit mixed on what the average win and average loss is here, but all 4 of them have historically done a little bit better on the upside in that last hour and 15 minutes of trading when this pattern is in play. So hopefully you found that helpful. Good luck today. We'll see you next time.